investors need to grasp the concept of ETF liquidity pools. Contrary to common belief, the liquidity visible on the secondary market represents only a fraction of an ETF's overall liquidity. While many focus on the trading volumes seen on exchanges, the less familiar over-the-counter markets and the primary market, responsible for creating and redeeming ETF shares, play critical roles. Secondary market and beyond. On exchanges, prices are matched using algorithms and advanced strategies. Investors can also utilize other execution approaches by engaging liquidity providers. The creation-redemption process, a cornerstone of ETF functionality, involves an in-kind transfer of securities between the ETF issuer, or trust, and authorized participants. The role of authorized participants. Authorized participants, APs, are broker-dealers with agreements to interact directly with ETF trusts for executing creation and redemption orders. During a creation, APs deliver a basket of underlying securities to the ETF issuer. The ETF issuer provides ETF shares to the AP in return. In redemption, the process is reversed. APs present ETF shares for redemption. The issuer transfers the underlying securities back to the AP. This in-kind exchange ensures tax efficiency compared to other fund structures, which may require selling securities within the trust. INAV, fair value, and trading costs. ETF pricing reflects a combination of factors, primarily the indicative net asset value, INAV, and the cost of trading the underlying securities. For U.S. large-cap securities, basket trading costs dominate. However, as we move to mid- and small-cap or equal-weight indices, liquidity constraints can result in higher trading costs. Additional expenses, like transaction taxes and currency-related costs, become relevant for international securities, such as European large-cap stocks. Emerging market, EM, large-cap securities often have higher transaction costs, leading to wider bid-ask spreads and arbitrage bands. Understanding total cost of ownership. ETFs differ from other investment vehicles due to their unique cost structure. Total cost of ownership, TCO, for ETFs isn't limited to the expense ratio. It also includes tracking return differences and trading costs. Key components include expense ratio, charged by the issuer to cover fund management. Tracking return difference reflects how closely the ETF follows its benchmark. Bid-ask spreads and commissions, costs borne by investors during trading. Interestingly, an ETF with a higher expense ratio can still offer better total net returns when considering other factors.